there's a real problem there. I think it's going to really bite these banks back. I really would encourage people to jump in on these class action suits and really hurt these banks where it really matters.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Really excited about part 2 of this month's interview with Andrew Maguire, where he talks about JP Morgan, some of the class action lawsuits that are starting to pop up, what he thinks would be the possibilities. So I think you're going to enjoy that. I'm going to be reviewing that. I'm hoping to hop into some of those. And a quick note, this episode is brought to you by Dolly Varden Silver, high-grade silver company, exploration potential as well in British Columbia's prolific Golden Triangle, although perhaps to me, more importantly, run by Sean Kunkun, who you've seen on the show, and I've been really impressed by. So brought to you by Dolly Varden. There will be a link to an interview with Sean if you'd like to find out more at the end of today's clip. So with that said, here is part 2 of Andrew Maguire.
It's likely going to take until December the 8th before the election results are definitive, after which fundamentals will just start to rule again. And it matters very little for gold and silver, whoever's in power. Massive stimulus, as we say, is coming. Global debt will balloon. And relative to weakening fiat currencies, gold will do what it's done for thousands of years, which is act as a safe haven. And insiders are already securing physical gold and silver against paper gold and silver ahead of all currencies falling in value against both gold and silver. So obviously, given the huge offside undeliverable paper positions, the only answer is to revalue gold against the dollar. And this can easily be done with the stroke of a keyboard. And the consensus is still, Chris, that gold will be able to run into 2,500 and silver into $35 before that trigger needs to be pulled.
Yeah, well, that will certainly be welcome news because, Andrew, one of the comments that I get from people, they ask the question, they email, and I think it's on people's minds, which you really actually addressed quite a bit in what you said there, but people are saying, when is this going to end? You know, it's like you see these forces building. Although perhaps, I mean, now that you're mentioning that there is a bank that's saying, hey, we'll pay a premium, we'll take it. We've heard Eric Sprott come on almost weekly say, it's interesting because the language he uses each week kind of just shows someone who's like, hey, I thought this last week, but now I'm seeing even more. You're seeing the same thing. Again, we'll have the December deliveries. Anything you could say to people who say, how much longer can it go on? What could the break point? Could we have silver under $25 2 years from now? Is that possible? Any thoughts on that?
It's totally implausible. And I think to have silver at these kind of levels in 2 years from now, to me, given you only have to stand there and look at the bigger economic picture. And look at these look at both metals, silver or gold, relative to those depreciating currencies. And it's not the fact that silver or gold is going to rise against these currencies. It's the fact that these currencies will fall against the value of these of gold and silver. So it really, that's where my focus would be. How much stimulus is coming in? Where, at what point does this bubble burst? At what point, how many trillions do you have to try and pay back here? So there's only 2 real benchmarks, as far as I see, gold and silver. So it's not really, I'm not even worried about the price. It's really how deeply discounted all our fiat currencies will be against gold and silver.
Yeah, well, that will certainly be interesting to see how that plays out. Another thing that I wanted to run by you, again, you talked quite a bit about here's another volume spike as the price of silver gets clobbered. I know you've spoken with the Department of Justice. You've spoken with the CFTC. you've also spoken with Andrew Bailey, who I believe is he now on the board of Bank of England governors, or is that I believe he's been.
He is the governor of the Bank of England.
Okay, so
yeah.
Everything that you just walked through, when you talk to Bank of England, CFTC, Department of Justice, do they see any issue with this? Does this seem, are they aware of it? Do they have an issue? What do they say to that?
Well, obviously, we've presented, it's even been to Parliament. We've even had this read in Parliament about the concerns about the too big to fail banks and their liability. And so, yeah, we've been to Parliament. We've had it read in Parliament. We've talked about this. We've actually pointed out some of the additional games. We talk about this EFP conduit. We've had this raised in Parliament. I've sat down with Andrew Bailey when he was still head of the FCA, which is equivalent to the CFTC, and warned him. And they took it quite seriously, that when you can take a paper contract and it can be rolled into a forward under 13 days, it doesn't have to be reported to the Office of the Comptroller. These liabilities build. There comes a point. Now these are taxpayer-funded banks, and the liability sits right on off their balance sheet basically, but sits on them. So we were really pointing out that's one issue. But then also, as we've discussed before, and as you're doing a great job in doing, there is plenty of class action suits ready to come out, especially now that we've had some of these admissions. There are more banks to bring into this fold. But essentially, this is what we warned about is, look, when the class action suits come in, there's nothing you can do to bail these banks out. You may be able to print a settlement in the over-the-counter market. You can square unallocated gold. What you can't do is stop literally billions and billions and billions of class action suits against these banks who will have to admit that what they've done. And since then, they've admitted what they've done, and more banks are admitted what they've done. So, I would strongly recommend that people do pull that trigger when it's offered to them. There are definitely some class action suits being generated. It's a pretty much of a no-brainer to me that you don't have to prove very much once the DOJ has called an organization a criminal organization or use those words about them. And if you can prove you've lost money as a result of spoofing, it's held about spoofing, but it goes far deeper than spoofing, as we know. And you and I both knew Bart Chilton, and he went through he went through how that went deeper than just spoofing. And so I think there's a real problem there. I think it's going to really bite these banks back. And I really would encourage people to jump in on these class action suits and really hurt these banks where it really matters. Always follow the money. And these guys, they may be bailed out by the DOJ, or they may be bailed out by give them $1 billion fine when they make $200 billion a year. And believe me, that what they disclose is a hell of a lot less. Is a hell of a lot less than they actually make. So rather than just a slap on the wrist, but I think class action suit is where power to the people, because people can come and pay these guys back.
Yeah, Andrew, and a question on that. Do you know, how they calculate what is a loss? So, for example, I mean, if I have, or other people have silver positions, this is back May 1st, 2011. Here's silver at $48. Do you know, is this considered can you say, all right, well, when the price was here, my value was X. What is the metric, or how do people, I actually participated in a suit after that Deutsche Bank transcripts came out in 2016. It didn't go anywhere. They never really gave much clarity on that. I'm wondering how even a judge or whoever decides that, it's actually interesting to think, how will they mark what is a loss? I mean, again, there's of course what a lot of us might suggest is reality, but in terms of what can investors actually document and claim, do you have any thoughts on how that will be determined?
Well, I think again, it's a difficult thing because, as you say, May the 1st, 2011, around about $50, and then you wake up basically, and you're $6 down, or you've been stopped out, and then the price comes back up to maybe $5, $1 down. Now, basically, really, you'd have to, and the tickets are there. So, whereas in the past, there's been insufficient discovery where you could actually, and not enough admissions were made where you could get discovery. And discovery, look, all of these tickets remain, and they will be kept there, and you cannot destroy them. So what you would then look at is at 1 o'clock in the morning, I guess our time, or whatever time was in the US, who suddenly came in when China was on holiday, UK was on a holiday, a lot of the Asian banks were on holiday, and really the only market open was the COMEX. Who would suddenly come in and sell literally billions of dollars of silver, essentially? Now, because there was something like 60,000 contracts. I mean, look, so those tickets are there. Somebody set that off. Now, was it in the form of a spoof? Yeah, massive spoof. So really, that's all you need to do is have sufficient discovery where you have now, and I believe that you could get that form of discovery where that could be demanded by a court. Court could look at those documents and say, and then one by one, and that was the most dramatic. But there are plenty of other instances, and a good lawyer is going to get very, very rich putting as many of these things together as they can. And yeah, so really it's a question of coming in, making a claim, providing the documentation that you believe you had. In other words, in this case, it's so easy to describe, $50, and suddenly you're lost. I mean, I do know people that lost 10 million overnight. Simply stopped out. And then who would be buying that back? And I guarantee it'd be the same person that set the waterfall off would be buying back those positions. So yeah, you could have them banged to rights.
Yeah, I really appreciate you mentioning that. I know Ted Butler's written quite a bit about that, so obviously I can guess, I can have you on to talk about it, but I don't see who sold here, who bought here, and how this was involved. But again, through the court discovery process, you would think so. And made a video last week referencing at least what I've been able to dig through. Although in my research, Andrew, I found something that, I don't know if you've seen this, you may find interesting, and certainly any legal folks out there. This is from Dawn Gill, and at one point, this is about a year or two ago, but she mentions former JP Morgan executive Robert Gottlieb is described in the civil lawsuit as controlling the decision-making for JP Morgan's silver position and took the primary role in trading JP Morgan's silver spread. Gee, he would be an interesting guy to talk to. But then continues down here, lawyers for plaintiffs in the civil case have questioned Gottlieb under oath, and also JP's former global commodity chief, Blythe Masters, and a bunch of other folks. I wonder if, I guess that record exists somewhere. In the very least, would be darn fascinating to hear. Again, this was back in November of just about 2 years ago, almost minus 2 days. And one of the follow-ups to that was that JP Morgan has settled, I believe it was the Daniel Shack suit. They have settled a suit. So my thought is that if JP Morgan has settled somebody's suit, Again, I'm not sure how much of that is public, but in some level, find out, okay, what was the basic case they made? Can you document something similar? And it would seem like, again, I'm not a lawyer, I'm going to research, but it seems like there's some reason for optimism here.
Yeah, I think what you're really describing here, and it can come in many different forms, is look, if you can threaten discovery, I think, and they see you have a good case to open up Pandora's box, they will settle. They don't want to open up Pandora's box. It opens up a myriad of other issues. So I think there would be some settlements. I think a class action suit would succeed. It would be settled on the court gate, on the court steps. I don't believe for a minute that they would want to allow discovery. It opens up far, far more issues for them.
Well, I appreciate you saying that, and will be darn fascinating to follow along in the coming months. Andrew, thank you again for your time today. And perhaps before we wrap up, could give us an update on Kinesis. And my friend Gavin tells me that debit card may be available in the US soon. What's going on there, and what can you tell folks about that?
Yeah, and in fact, that's great. I mean, that beta testing of the US physical credit card is been underway for a little while now. That's going to be made available pretty soon. We also have the virtual card in the UK and other parts of the world. But I guess really, what I'm really pleased to see is such a global willingness to readopt gold and silver as everyday money, and I think that's important to me. I think this is what I'm enjoying about this journey. Now, obviously, this couldn't be done without first securely digitizing your personal physical holdings and setting it free on the blockchain rails, which is something perhaps the election should have been done. It should have been on the trustless blockchain rails. There would have been no issue then. But anyway, really talking about gold and silver, and Kinesis, look, we've discussed the personal yield benefits you enjoy by, simply holding, sending, spending your Kinesis currency, even on the credit card, so a debit card. So in fact, really, I think it's something that really is it's so different to what is on offer anywhere else. And this includes, obviously, we're seeing huge interest in our public-private partnerships, which are beginning to expand. And I think this is to me, this is the next level. And I think as we bring the retail side in, these public-private partnerships are expanding. This includes institutional investment fund and government integrations. So this is going global, some of which you already know, but there are many more coming. Now, these integrations will inject massive liquidity and velocity into the Kinesis monetary ecosystem. And this is great news for everyone as the fee-sharing pool expands for everyone using Kinesis, no matter how big or small. So even using this debit card. So utilizing, obviously, this is all about utilizing cutting-edge blockchain technology. So, if you remember, I mean, most people know what Kinesis is, but Kinesis, really all it does is enable us to digitize our gold and silver into the small enough units that we can use it as an everyday currency. And essentially, our gold and silver are transformed into a fast, secure, redeemable e-payment currency. And once it's securely digitized, we're able to spend, save, hold, or this physical gold and silver assets in its ultimate liquid form. And this is where Kinesis comes in. So Kinesis provides all the security required to trust your gold, is always titled and accessible to you, and enable you to exchange your gold currency for any other currency or back to physical in an instant. Also, unlike any other e-payment offering, Kinesis enables you to own a stake in the actual Kinesis monetary ecosystem itself, just by using it. You share in the yields generated, and it gives everyone, no matter how small or large, to become your own central bank. So I would just say, please feel free, open up a free account, come and join us on this journey.
And fortunately, the link to do so is right in the description field below. So Andrew, I can't thank you enough. What a great call we had this month. Fascinating things happening in the world. You know, I used to think back, my eyes were opened by the housing bubble, and I'm like, wow, I wonder what it would have been like to have seen all this coming beforehand. And to think that we all get a second chance at it. You lay it out each month. So thank you for doing that. And folks, again, hit that subscription button and the notification bell so that each month when Andrew joins me, you'll be the first to know about it. And with that said, we'll wrap up for today. Thanks again for being here, Andrew.
Oh, thanks, Chris. Looking forward to it next time.
So that is part 2 of this month's episode. Thanks again for watching. And to find out more about tonight's sponsor who brought this to you, well, here's an interview with Sean Kunkin of Dolly Varden Silver.